continue to admit people as they come in. I see that we have 5, 7 counting people waiting in the room. So please, Damola Olumide, kindly assist in admitting people into the meeting. So at the society, we like to keep the time and 10 o'clock, and here we are, 10 o'clock. So I'd like to start this meeting by welcoming everybody, distinguished directors on the call, team members of the Society for Corporate Governance, welcome. Ladies and gentlemen, good morning and welcome to the Society's 2026 Economic Outlook Breakfast Meeting. We're indeed pleased to have you join us. This is our first program for the year and usually our flagship program at the beginning of the year. Today, our breakfast meeting is designed to provide insights and pretty much clarity of the economic trends and trajectory in 2026, while we also will be examining the governance implications of these changes. Our objective is to move beyond the headlines and equip ourselves with practical perspective that supports informed decision-making, resilience, and sustainable growth. We are very much privileged to have with us distinguished speakers who bring deep expertise and practical experiences to this conversation. We look forward to an engaging speech and a rich panel discussion that will address what leaders, directors, and founders should be most watchful for in this year. It is my pleasure to introduce to you our keynote speaker for the session, Mr. Niyi Yusuf. Thank you so much for joining us, Mr. Yusuf, and also thank you for joining quite early. We know that we have a limited time with you, so we'll make do of it. Mr. Niyi Yusuf is the Managing Director of Verica Partners and a highly respected business leader, a strategic expert with extensive experience in consulting, economic advisory, and political engagement across Africa. He has worked closely with governments, corporates, and institutions to shape strategies that drive growth, resilience, and long-term value. Mr. Yusuf brings a strong data-driven perspective to conversations on Nigeria's economic, combining economic insights with practical implications for businesses and governance leaders. He will be speaking to us this morning on the theme, the 2026 Economic Outlook, Macroeconomic Trends, Governance, Structural Reforms, and Growth Perspective. Please join us as we welcome Mr. Niyi Yusuf. Sir, are you ready?
Yeah, good morning, and thank you.
Good morning.
I should be ready. Let me just try and start sharing my screen. But thank you for the opportunity to present. I assume I'm audible?
Yes, you are.
Okay, and I assume now, please do confirm if you can see my screen.
It's coming up.
All right. Never know for network.
It's fine.
Hope you can see it now.
Perfect. Yes, we can.
All right. Okay. So thanks and good morning, everyone. And thank you so very much to the Society for Corporate Governance of Nigeria. Thank you for the invitation. Corporate governance is an important capability that we all must get involved in. And so it was easy for me to say yes when I got the invite. One, based on the nature of the society, and second, based on the individuals that I know are involved in the work of the society, from the founding members to the current leadership. So thank you for the opportunity. So I've been asked to speak to the economic outlook for the year 2026. And so I'll be taking it in 3 segments. First, just doing the global global macroeconomic review, because we live in a world, and in a world that's increasingly becoming fractured and factionalized. And then after that, we'll then speak more around the Nigerian economic outlook, also domestic. And then I'll end up with implications for businesses. And I hope we all can have a few takeaways from this. So in terms of the global outlook, last year, Veraki came out with these 10 trends that we see that are changing the world that we live in. And the first trend is digitalization. Almost everyone now is affected by technology in some form. The cell phone that I carry in my pocket has more power than the mainframe that I used when I was a student in Ife. And that just to show you how much power, how much technology has improved and how much power it has given to individuals. Second is around information tsunami. There's so much information now flowing in the world in a real-time basis. And what you do in your room or what you do in a party, somebody is recording it on TikTok or on Facebook, and it goes global. Um, like someone was joking, we all wake up and you hear news about what a certain president has done and how a tweet has become a defining moment for the day. So information is moving and moving very fast. Next to that is global geopolitics. We now live in a multipolar world. Used to be US centric or the West centric, or in the past, actually in the 60s and 70s, it was the West versus the East, and you had a number of countries being in non-aligned. And then gradually it became a unipolar world. Everything was the West. I think now it's becoming multipolar. China has its own views. Russia has its own views. The European Union are beginning to have their own voice and their own views. And so we're seeing a fractured, disruption to the international rules order as we know it. And that has implications for businesses, for companies. Where do you source capital? Where do you source talent from? Where do you source your product from, etc.? Climate change is getting nearer home than we think. The last 3 years, we've suffered flood in more than 2/3 of our states. And this year, it started raining in January. I really can't recall the last time it rained in January in Lagos. And so we're beginning to be affected by climate issues. Then generational shift. The world is younger. Certainly Nigeria is younger. 45% of us are below the age of 15. 70% of us are below the age of 35 in Nigeria. So it's a younger world. And now you have like in some companies, you have 4 generations in the workplace. So how do you manage the conflicting demands of those multi-generations that you have in the workplace? AI, if internet has changed the world, I reckon AI will change the world 1,000 times more than the way internet has changed it. And I think we are just at the beginning of the AI journey. And the advancement we've had in technology, and I use the word we loosely, talking about the world now. The advancement in technology has led to great innovations, which have created a sense of soft life for many. So whether you're talking about advancement in medicine, in sciences, or even in mobility, decades ago, you would ride a horse, then you would ride a car with PMS, with petrol. Today, you are riding a car with electronic vehicle. And tomorrow, you're unlikely to even drive. The car will be driverless. And that we are seeing today in certain states in US. And so innovation is changing the way we live, the way the world lives and work. And that is making life a bit easier. Population growth. The world is growing at a rapid pace, especially the global south. So while the global north may have low fertility rate, the global south still has significant fertility rate, especially in Nigeria. And so population growth will lead to various dynamics. And of course, we have digital finance. Digital finance will help to improve financial inclusion and I think the rising impact of stable coins and other means of digital finance will ensure that the world remains decentralized and the hegemony of the US dollar, it's something on that trend. And lastly, workplaces need to focus on being more human because the millennials and the Gen Z don't want to work for one employer for life. And so employers need to focus more on their employees and make work as interesting as it could be. So those are the trends, and we think that those trends will continue to impact us um, in 2026 and even beyond. So when I look at the global outlook, what forces are shaping growth or risk, and what opportunities does it present? I think if nothing else, so I mean, 2025, the key word in the dictionary was uncertainty. And I think in 2023 or so, the word of the year in Collins Dictionary was perma crisis. Perma crisis means we're in a state of permanent crisis. In 2025, the key word was uncertainty. In 2026, I think it's going to be also volatility or uncertainty. Um, the World Economic Forums did a survey of chief economists, and 72% of them expect it to weaken in 2026, right? Largely due to disruptions in trade, in technology, and institutions. And these are all man-made issues, really, which is a sad thing. But if you look at the predictions, different predictions from IMF, from OECD, all of them suggest global growth will not be more than 3%. And so the consensus is that it will be a flat growth. 2024 global growth was 3.3%. 2025 around that same 3.3%, and this year we're also 3.3%. Now, if growth is stagnating, whereas population is increasing, then you know that the world is getting poorer as well. Now, of course, the growth is not similar across board. Sub-Saharan Africa will grow at 4.6. China will grow, but not at the 6% that is promised. India will likely grow 6%. And so it's uneven growth, but the key message is global growth will be flat in 2026, same as what we had in 2025. And the key drivers of the flat growth, in my view, there is energy prices are likely to reduce, interest rates are beginning to come down, inflation is beginning to come down, especially in the developed economies. But I think the greatest source of concern and that will affect global growth in 2026 is geopolitical tensions. The USA is now becoming a strategic risk for countries and for businesses. And so whether you are looking at the Russia and Ukraine war or what is happening now in Venezuela or what may happen in Greenland, what may happen with NATO, what may happen in the Red Sea, Suez Canal, I think there are just many flashpoints that can lead to significant disruptions in 2026. Beyond the tariff and trade wars, it's also a rising sense of nationalism, etc. And so for me, geopolitical tensions is one of the greatest risks to really watch out for. And not just me, if you look at what a number of global institutions have said, so from the IMF to the World Economic Forum to the World Bank to EU, risk, risk, risk. Risk from tariff barriers, risk from climate shocks, and risk from geo-economic rivalry. So 2026 is a year of, likely be a year of policy uncertainty, a year of global risk, and of course, a year of geo-economic rivalry and geopolitical rivalry. So it's a structurally more fragile and more fragmented year, or it's likely to be a more fragile and a more fragmented year. So it's a year where we all need to be watchful. And in Nigeria parlance, you need to be prayerful. Right. And so what does the global trends, what do they all mean for Nigeria? A few things. So if the price of commodities reduce like we think it will, then that will affect our earnings from crude oil. And crude oil today is more than half of government revenue. It's a large chunk of about 80%, 86% of our FX earnings. And so we'll expect that policymakers may choose to begin to accelerate non-oil exports. And indeed, if you listen to the National Economic Council, the first meeting of 2026, the major item at that meeting was how do we grow non-oil revenue sources, non-oil export in Nigeria. And so we're beginning to think along that way. Global inflation is cooling, which will be good for the country and for the world as a whole. But a growth of 3.3 that is flat may also lead to lower demand for Nigeria's oil. But the good thing is the large chunk of our oil is being exported to India, and India will likely grow, or is estimated to grow at about 6% this year. So that will be useful. Now, if I come back home, domestic and macroeconomic outlook for Nigeria, a snapshot of what we've seen last week. IMF upgraded its outlook for GDP growth to 4.4, matching what the World Bank had also projected. And so, whether you're talking to the World Bank or Afreximbank or AFDB, it's minimum 4% growth. The NESG, where I chair the board, suggesting 5.5% growth on the optimistic side. And so, I think key consensus is that Nigeria will grow, and the growth, in my view, will not be less than 4.5% in 2026 if we don't score any own goals, as it were. And the key sources of growth will come from crude oil exports and also non-oil exports, and then ICT, tech, and a bit of agri. And so if you look at our scorecard, what's Nigeria's economic scorecard the last 12 months or thereabout? Quite a number of areas are green, which is good. So whether you're talking about GDP growth in terms of oil, in terms of non-oil, or inflation that is reducing, exchange rate that has been stable at the 1400 plus range, our stock markets, where capitalization has gone beyond the 100 trillion mark, which is good. PMI has been consistently above 50%, which again is good. But the downsides could be its crude oil production. We did not produce as much as we budgeted. So the benchmark for crude oil production last year was 1.8 million barrels per day. We struggled to do 1.4, 1.5 million barrels per day. So we didn't produce as much as we thought we will. And then the price of crude oil was also below the benchmark price. And certainly, I believe this year, the price of crude oil will continue to go lower. Income per capita is low, so many of us are getting poor, but trade surplus is fine. Debt service, we're spending a lot on debt. We are spending a lot to service our debt, and we're paying for the sins of the past. And so, good macroeconomic scorecard in my view, but just a few areas to worry about in terms of our FX, crude oil production, crude oil pricing, and of course, poverty level and debt service, so the fiscal public management side. But I think the greater issue for 2026 in Nigeria is really around risk. What risks do we see? There are some known risks, but I worry more about the unknown risk. And these are things that have the potential to affect industries, affect the economy, and affect also individuals in 2026. And so part of the known things that we know will happen, we believe there will be over 4% economic growth. I think it will be more than 4.5%. Inflation likely to get on to below the 20% range, and exchange rate will still be stabilized at below 1,500. We continue to have fiscal pressures, especially due to our high debt service ratio. But the known unknowns, the things that we know, but we don't know what they may likely cost. The first one is the new tax act, which has gone into operations in 2026. We believe that should be good for the loan-earning individuals and also for small businesses. But we'll see what the impact will be by the second half of the year. Remarkably, we are going through recapitalization of the banking industry, of the pensions industry, of the insurance industry, and last week also of the capital market industry. And so first time in a long while, I think, that all the major sectors in the financial services industry are raising capital, are increasing capitalization. And so that may lead to more capital being available to support business growth, or it could lead to taking more risk, and then you begin to have high NPL, etc. But the reality is the financial services sector is going through a period of capitalization. I think a known unknown is the stance of US. So beyond designating us as a country of particular concern, I worry more about the US National Security Strategy that was released in November last year. A 32-page document, and the entire comment on Africa is limited to just 3 paragraphs. And it was about less about aid, but more about trade and resource extraction. And so the US is deprioritizing, to my mind, deprioritizing Africa in terms of how it supports, and not just looking at it for what trade or what resources can we extract. And the another known unknown is our neighbors. We are now in a period where, if you look at our neighbors, they're all been affected by military coup, even as recent as Benin Republic a few weeks or months ago, or from Mali to Sudan crisis. And so we have poor neighbors, and that affects our ability to export. That affects trade. That affects services across border, because naturally you trade with your neighbors. And so the more we have fragile neighbors, the worse it will be in terms of implications for us in terms of trade and cross-border trade and services. Then we have the unknown unknowns, the unknown risk that we don't know how it will pan out. First is insecurity. Then, of course, climate change, which I've talked about, geopolitical issues, the global economic surprises. It's actually not a surprise. I think there's a disruption to the global world order, and it can lead to many things, whether it is war or it is a recession. We don't know how it will pan out. And lastly, is technology. So my view is the outlook for Nigeria in 2026 is contingent on many of these risks, the known unknowns and the unknown unknowns, and how they will either crystallize or how businesses should prepare. So businesses should be developing scenario planning. What would we do if there is this? What will be our response if A or B should happen? Now, picking from a few slides from the Nigeria Economic Summit, where Economic Summit Group, where when they launched the macroeconomic next year, 2026, it's significant for us. The economic has been stabilized, but stability is not the goal. The goal is really prosperity. The goal is growth. And so today we're seeing a growth gap. The economy is growing less than 4%, but what is desired is 6%, 7%, if we want to become a $1 trillion economy. Second is the fiscal stress, like I've talked about. Debt service has increased, even though we are paying for the sins of the past. But more fundamentally, structural weaknesses, where manufacturing and agriculture grew less than, 2% thereabout. You can't have a productive base if manufacturing is growing at only 2%. And so we are reliant on services. And we've got to remove that structural weakness so that our manufacturing outputs can improve, can increase, and we should be exporting to the rest of the region. West Africa really should be our play area. And the greatest risk, I think, is policy reversal. Are people getting tired of reform? Would there be reform fatigue? And experience has shown that in other countries, if you look at Ghana, you look at Brazil, countries where they've had good reforms and then they slow down, they slack, those countries go back into turbulence, into recession. And so we as a nation must continue to focus on reforms and strengthening such that we don't have the reversal. And unfortunately, this is election campaign period. And so let's hope that government will focus on doing the needful and avoiding policy reversals. And to do that, we must continue to focus on the macro stability of our macroeconomic items. So inflation keep reducing. The CBN is thinking of, or has estimated that inflation could be single digit by 2020, 2029, thereabout. We must continue to increase our reserves. We must transform the economy. Manufacturing should be growing 6%. Agri should be growing 5%. Agriculture today represents more than a quarter of our of GDP. And so it's got to be growing beyond 2%. And we need to solve the power issue. We can't and we won't have a huge transformed modern economy running on generator, right? Our economy must run on the public grid. And today, quite a number of businesses are completely offline. So we've got to solve the power issue and ensure that we generate more power. We should be generating 25,000 and more megawatts of power, not something at 5,000 that we have today. We must strengthen our institutions, and we also must protect the poor, create more jobs for millions of youths, and improve the skills to industrial linkages. So these are the work that the government needs to do. And if you do some of this, Veraki estimates that will grow between 4.2 to 4.7% in 2026, which is good growth, higher than 2025, and of course higher than our population growth. And so we think that it's possible. And sectors that are likely to grow: transportation, water, mining, finance, real estate. So again, the normal suspects. Those are sectors that are likely to grow. ICT, mining here is really around cement, and then real estate, construction, and professional services have good prospects of growing. A look at the budget, the proposed federal budget. The big news is debt funding. We're not generating enough revenue as a nation, and we're spending a lot to service our debt. The budget size is about 42 billion US dollars, not enough for the infrastructural needs of the country. And so I will not be very disciplined with managing our budgets. 2025 capital projects has been done less than a third, and now they've been shifted into 2026. And so we're going to do more in terms of managing our budget. But priority areas, it's the Nigeria First policy, meaning buy Nigeria, spend Nigeria. All of that will be useful and will present opportunities for businesses. We've got to focus on food security so that we can feed 200 million plus individuals. And so to the investment environment, the stock market is growing, which is good. FDI inflows is not as high as we'll expect it. We need to do more. And Nigeria is launching a new investor single window that also will be the single trade window for customs that can help with exports, and hopefully we can drive more FDI. We need to improve our ease of doing business. The easier it is to do business, the more likely investors will invest more, and will create jobs. Everybody benefits. AI, I see this as an opportunity. We did a survey last year in Veraki, and 87% of business leaders say the organization is ready to adopt AI. We are at the early stages of AI, and we see the opportunities to use AI to drive growth and to drive transformation. So again, businesses should be looking at AI and asking yourself, what does it mean for my company? How do I adopt AI, and where do I start from? What use cases, etc. So implications as I get to the end. Fundamentally, 2026, in my view, will be a volatile year, unfortunately driven more by external issues from the global geo risk. But it does have selective growth opportunities, and companies and countries will need to carefully choose who do you want to work with. And I think, the buzzword now is strategic autonomy, is sovereignty. Each country, each business needs to choose its partners, and not just one partner, but different partners based on values, based on strategic needs, and of course, based on the opportunities that are presented. And when you have a volatile world, when you have a volatile environment, your response should be about resilience, it's about flexibility, it's about agility. So businesses need to improve the resilience of their operations. And one good way to do that is diversification. So don't have just one source of capital. Don't have one source of inputs. Don't have one source of supply. Diversify your supply chain, diversify your locations, diversify your energy, your logistics. Cost will continue to be an issue. Inflation will still be low double digits at the 10, 12, between the 12 to 50% range. And that's year on year. So meaning whatever you bought January last year may have a price increase of between 10 to 15% this year. And so inflation will lead to more cost pressures. And so companies need to begin to carefully think of what substitute products can I put into place? How do I manage my cost exposure so that I can continue to be affordable or at the right price point and continue to grow your market. With inflation, households become poorer, and so demand will shift. And so companies need to begin to look at their portfolio mix, at their product mix, and see which products would lend itself to a high inflation environment, which product will lend itself to high-end luxury or to the middle class. Every business needs to be tax compliant this year. The new tax act is in place, and we all have an obligation to ensure we obey the law. And so compliance to regulations, including the new tax act, is something that every business needs to focus on. The good thing, businesses that are small businesses with revenue less than $100 million have a lot of exemptions. They don't need to pay CIT, they don't need to collect VAT, etc. And so I would say every business should get an accountant or a tax consultant who can share with you what is required, because ignorance is not an excuse. Oil output will continue to be a big play in Nigeria's economy. The proposed budget suggests 1.8 million barrels per day. God help us to make that. We haven't in the last 2-3 years, but we're beginning to see more indigenous companies buying over, taking over the multinationals as they leave, especially in the onshore land. And so they hopefully can better manage community issues, they can better manage stakeholders, and we can begin to see them ramping up and bringing more oil wells on stream, as we've seen with Renaissance or with Oando or with Seplat. So which is good. So that can, and the government needs to just continue to maintain that stability. So the rising crude oil production is good for us. We also hope that the price of crude oil can be steady. And lastly, politics and regulatory uncertainty still remains a big issue, especially as we enter into election period and with more regulators trying to grow IGR. Our hope is that regulators will focus on creating an enabling environment and less on generating fines or generating income. So implications for corporate governance in the year: there will be higher expectations of accountability, of transparency, as some of these reforms go into place, especially the new tax act. And we almost focus on compliance, We almost focus on controls to ensure that we do the right thing, given the reforms that are coming, and also given the new tax law. Every business needs to have a stronger focus on risk and on scenario planning. Right? A year of volatility, a year of uncertainty, you can't have a fixed plan. You've got to be pragmatic, and some will have an annual target, but have quarterly plans of how you want to meet it. But more importantly, just have scenarios. What are we going to do if A happens? How would the business respond if B happens? And lastly, you need to have more capable governance, more capable boards, more accountable board members, drive accountability to drive transparency, and of course, engage with various stakeholders, engage with investors, and be transparent about the issues that are happening. So in closing, the world we live in remains volatile, remains uncertain, complex, and ambiguous. And I dare say 2026 will be a high mark of that, given what we've seen so far. Change will happen, and the speed and magnitude of change will be unpredictable. No one could have predicted what is happening today in Davos, or what US wants to talk about in Greenland, etc. No one can predict how AI will shape the economy or will affect the world. So the speed and magnitude of change is really unpredictable. And despite your meticulous planning, one black swan event, one unplanned event can change everything. And so companies need to be agile, companies need to be flexible, and companies need to be prepared to thrive even in a very difficult and changing environment. Thank you. So I'll stop here, and then we can take comments.
Yes, we can take question and answer. Well, thank you so much on behalf of the board. I would like to say a very big thank you for this insightful presentation. And I can see a lot of virtual hands clapping. I believe that we have had a very good discussion this morning. But we'd like to open it further. If you have any question, we have some time to with Mr. Nii, I believe. So if you have any question you want to indicate by raising your virtual hand, then we'll ask you to unmute and speak. If not, we're also going to look at our chats to see if we have any question on the chat box. But again, we have a second session, which is a panel discussion. So I would like Dr. Coker to please be on standby to take over from me. So any question? Good presentation, a lot of information. Can I get the slides? Yes, you can. The slides will be made available to all participants at the end of the program. Thank you, Mr. Good presentation. Okay. So nothing from the chat.
There's a hand up. No, Rabi's hand is up.
Okay, if there's a hand up. Yeah. Please unmute and speak. Please unmute and speak if your hand is up.
Thank you very much. Thank you very much, Mr. Yusuf, for that presentation, as usual. For me, thinking about what is happening in the world today, and you talked about Black Swan, and it really got me thinking about the fact that most of the radical changes that the world has experienced has been actually due to those Black Swan events. So in effect, these are things that are not in your presentation, basically, because they're Black Swan. So, and for me, I feel like today, the world that we're in probably puts us at the brink of another Black Swan event. We don't know what it is. I mean, some of it is good, so you can imagine the likes of for example, Uber and the rest of them disrupting their industries, because these are unenvisaged developments, but have turned out good for the world. And businesses that have been supplanted need to adapt. So what would you advise businesses to do in the face of likely black swan events? I mean, we have to prepare for those unknowns that will radically perhaps shape the way we do business, shape the way we see the world. And you've given areas that we need to look at. But I'm just thinking in terms of maybe even board level or executive level, what do people, businesses need to do basically to be able to put themselves in good stead when those black swan events happen, to be able to adapt and emerge, still surviving and perhaps even thriving? Thank you.
Thank you. I mean, it's a question that I keep reflecting on. And this year will be full of surprises, positive or negative, clearly. And so it's how do you prepare? I think first is really just a mindset shift. The mindset that says this year will be a year of surprises. This year will be a year of black swan. This year will be a year of volatility. And in that volatility, I would like to seize advantages, because every crisis has positive or negative, right? I mean, when we had COVID was a major crisis, but some companies benefited from it. Companies in the health sector benefited, but even in technology companies benefited. So today we're all on Zoom, right? A decade ago, nobody was using Zoom. Yeah. But Zoom benefited from the COVID crisis. And so every crisis will have some benefits. And I think we just have that mindset of how do we prepare ourselves to be able to sense what is happening and then be ready to capitalize on it. So part of it will be having some buffers. Yeah. So you don't want to spend all your capital. You want to prepare have some buffers ready, such that if there's an opportunity, you can dip into your pocket and pick up and buy that opportunity and seize that opportunity. So have some capital buffers, have some reserves that I can put at play. Third is around your sense of risk management. So risk management was something that comes front and center in 2026, but that allows you to then decipher what is real from what can just be a phantom opportunity. And I think the last thing will be around collaboration. This is a year you've got to collaborate and network and talk more with others, because that then allows you to be able to sense changes quickly, but more importantly, to work with others. Like they say, 2 years are better than one. You want to go fast, you walk alone. You want to go far, you work with others. So when you work in a collaborative system or with some partners, then 2 + 2 is greater than 4. And that increases your ability to respond. So I hope that helps. There are a few questions in the chat that I just tried to quickly address. How is Nigeria's 2027 political terrain will affect or improve investment returns in 2027? So again, it depends on where, on the sector. Let me put it that way. It depends on the sector, right? So if you take the monetary space, preparation for politics will mean more projects from government, will mean more money being spent. And we know government is not the most efficient or not the most productive. And so bulk of the money that will be spent may not be spent quality-wise. And so that will lead to CBN continuing to raise interest rates, the monetary policy rate, so that they can, what's the word? They can tame the flow of monetary supply and just increase the cost of capital. Now, if you have excess capital, that is good for you. So you place your money and you get double-digit yield. So that is good. If you are in the infrastructure space, if you are in the construction space, if you are in the cement space, If you're in the transportation space, these are sectors that will benefit from increased public infrastructure works, etc. So the 2027 elections, government activities will affect industries differently. There's a focus today on agriculture. Government wants to capitalize the Bank of Agri to $1 trillion. I believe they've released 250 billion. And so that will be good for agriculture. So again, just you need to look at what areas. MK, how does FGN, how can the federal government collaborate or rein in the subnationals? Unfortunately, I mean, what we are in a federation. Federation means federal government and the states are partners, and to an extent, almost co-equal partners, right? It was, a decade ago, we had a government that refused to release money to Lagos states for local government subventions or local government money. But the Supreme Court has ruled that that is wrong. So the federal government cannot withhold capital allocations to the states. So I expect it will be a lot of moral suasion, but I also expect we can look at a bit of incentives, carrots, that if you spend your money this way, perhaps the federal government may then give you such rewards. But even as I said that, I'm mindful of what has happened with UBEC. UBEC is the UBE, where states are supposed to counter-fund with the federal government, and states have refused to. The money is lying down there because states said UBEC is setting rules that defines where they should spend the money and how they should spend the money, and some of those rules may not be relevant for their states because each of the 36 states is unique in its needs and its requirements. So I would say a lot of it will be moral suasion, a lot of it will be persuasion, but it will also be signals of, if you do this, the federal government may support like this, and that way it can help. But unfortunately, we are going to an election year, and investment in infrastructure, investment in consumption, in stomach infrastructure, sadly, are things that win election in our climate. So until we reduce poverty rate, until we increase human capital, our talent density, the quality of talents, will still be challenged there. How do we assist and ensure more transparency to hold public officers and leaders accountable? My hope and prayer is that the more of us pay tax, the more we'll be, more interested in how our money is spent, starting from the local government, actually. I'm less bothered about the federal government because I think we all scrutinize the federal government. I worry more about the local government. Do I know my councillor? Do I know my local government chair? Because think about it. Inner roads, the road to my street, it's a local government road. Inner roads, primary healthcare, primary education, markets, these are things for local government, not for states, not for federal. Now, yet our primary education is horrible, primary healthcare is horrible. So if you can even fix our local governments, and they are the nearest to us, so the more tax I think we pay, hopefully the more noise, the more scrutiny we can put them, and also the more good people can then step up to the local government chairman, because now local government are having significant resources, significant capital, and so that may make the role more attractive to more good people, and we can then have good governance. But I would say let's start from that. As we read the budget of the federal government, can we scrutinize the budget of the state? Can we scrutinize the budget of the local government, etc.? Should we expect a result of a financial sector? Should we expect a shakeout in the financial sector recapitalization? I mean, so I really don't think there will be a single shakeout, because today, more than 2/3 of the banks have all raised the capital. And even for the ones that are yet to declare, they all can, you can move from being national to being regional, which is 10 billion, and most of them have the 10 billion. So I'm really not expecting a shakeout, but what I expect is that there will be some specialization, and then there could be more capital available to spend, which can lead to more lending, which can lead to more investments. I think SMEs will benefit from this new tax act. SMEs that have less than 100 million. And if you remember, we're a country of SMEs. I mean, statistics suggest more than 44 million of our businesses are SMEs. And so companies or businesses that trade less than 100 million, they don't have to pay CIT, for instance. They don't have to collect VAT or collect withholding tax. So I believe the new tax act is good for small businesses. Even for large corporates, you can now charge back you can recover your VAT, your input VAT, etc. So overall, I think the new tax act is good. I'm not looking for the best tax act. I'm looking for an improved tax act. And what we have is a significant improvement on what we have now is a significant improvement on what we had before. And I think it's a journey. How's Nigeria ready for after? I don't think we are as ready as we should be for AFTA. The AFTA is African Continental Free Trade Area. We need to improve our productivity. We need to solve the power issue. For quite a number of businesses, power supply and insecurity, the two of them had an extra 55% on operational costs, 55% on operational costs. Now, these are issues, power supply, insecurity. These are issues that businesses in other countries, other African countries may or may not have. And so ab initio, our products are 55% less competitive compared to the other countries. And so that will have implications for how successful we can be in terms of trade. But we do need to improve the productivity and competitiveness.
She knows what to do now.
Of our
businesses. She's the one in charge.
We do need to improve the productivity and competitiveness of our businesses before they can trade offshore. Physical security, insecurity remains a big issue. Thanks, Yinka, my brother. And like I said, security is an additional 25% cost for a number of SMEs. So we've got to solve the security issue. And it affects us in many dimensions, right? If farmers don't plant during the planting season because they can't go to the farm, there's nothing for them to harvest during harvest period. And then that increases the cost of food. And food is a major chunk of the rising inflation, even though inflation is now reducing because we open up our borders to allow food stock to be imported. If we don't sort out the insecurity in the middle belt, the middle belt is our food basket, but more importantly, it's also a means of logistics, right? So the food that is grown in the north needs to be transported to the south, either for market access or even for export. And if you don't manage your logistics, your rain, your road, your rail, your transport corridor, you cut that off. Machineries that you import and that land at the ports in the south, those machineries cannot be transported to the north if we don't sort out insecurity. And of course, people. I know many people that have not left Lagos State, for instance, because they are afraid. And so insecurity, it's an issue we need to solve and solve quickly. And part of that is what has led to the US intervention, sadly or rightly or wrongly, because again, it's been tied to killing, it's been tied to insecurity. So I think I've answered, yeah, some farmers, so communities in Zamfara today, farmers cannot go to the farm to harvest their products. And so imagine a farmer that invested time and money and resources, and then they can't harvest, which means they lose the harvest, they lose the money. Such a farmer will not farm next year. It doesn't matter what you say. That person will not farm next year. And so next year, there will then be lower harvest, and then inflation will come up again. So it becomes a what's it called? What's the word? A very bad cycle that we need to break. So yeah, insecurity is a big issue, and it's part of the risk that I talked about. It's how do you really ensure we manage the risk of insecurity. Okay. So I believe I've answered the questions in the
yes.
Yeah, but very useful questions.
You did. Absolutely. Thank you so much again for your time and also taking the questions. We are grateful indeed. And also to our participants, I'd like to say thank you for, also interacting with our speaker. On that note, I think we'll be moving to the second session, which is a panel discussion. And I would like to yield the mic to our moderator. She's a member of the society and a director of the Lagos Internal Revenue Services. Folashade Koka will be leading the panel discussion with two of our speakers, and will be speaking more around corporate governance and what board leaders should look out for as a touch point to ensuring a sustainable growth and a sustainable business in 2026. So Dr. Koka, if you're ready, I'll yield the mic to you now.
Thank you. Distinguished guests, board directors, senior executives, and industry leaders here present, ladies and gentlemen, I want to wish you a good day. On behalf of the Society for Corporate Governance of Nigeria, I thank you all for joining us today. It's the moment that is both defining and demanding for Nigeria's economy in 2026. My name again is Folashade Koka, and I want to appreciate the keynote speaker, Mr. Niyi Yusuf, for setting the tone for today's conversation. The reality is that the conversation before us is less about intentions or announcements, and it's more about outcomes, what outcomes we're expecting or looking out for as business owners, credibility of the systems, the structures and the policies that are in place, as well as execution of those policies. And why is this so? It's because the global environment as we have it today remains fairly uncertain.
Okay. Oh, sorry.
Domestic pressures persist, and expectations from us all are quite frankly very high. So the economic discussion, as usually had, dominates mostly macroeconomic aggregates such as GDP growth rates, inflation figures, volatility or stability of exchange rates. But the reality, and you will agree with me, that the real test of economic direction is usually found at the microeconomic level. Where must we assess how firms are investing or retrenching, how households are coping with economic policies, how markets are responding to policy signals, security, transportation issues, how various institutions in Nigeria are translating reforms and the lived economic realities. The theme today for today's session is 2026 Economic Outlook, Microeconomic Trends, Governance and Structural Reform and Growth Prospects. It is therefore intentionally framed by the Society for Corporate Governance. So the task before me is very simple. It's just to interrogate not just what policies exist, but how they are working, where they are binding on us as business owners, policymakers, and why such outcomes sometimes fall short of intent. It therefore would compel us to confront hard questions about governance, quality, institutional capacity, and coordination of the political economic reforms. So this session is no way designed to be a forecasting exercise, nor a platform for generalities. It is intended to be a diagnostic and forward-looking conversation, one that prioritizes evidence, trade-offs, and implementation above all. So I have been charged to guide the discussion, and we are privileged to be joined by very outstanding and distinguished panel whose experience spans policy designs, regulation, corporate decision-making, and market execution. I therefore invite us all to listen with rapt attention, engage thoughtfully, and challenge assumptions respectfully. Joining us to do justice to this conversation today is Mrs. Adeolu Adewumi-Zer. She is a global strategist and the internationally best-selling author of Afro-Optimism Unleashed, Scaling African Excellence for Global Stage. With over 25 years of leadership across 4 continents, she's the founder of Zer Consulting Africa, where she selectively partners with enterprises generating above $1 million in revenue. Adeolu utilizes a proprietary scale framework to build the path to global excellence. Previously, she was the MD CEO of Alliance Nigeria and the regional head of M&A Alliance Africa. She spearheaded a 500 million euro portfolio expansion across Africa. Currently, Adeolu is the CEO of Shared Value Nigeria and an independent non-executive director for Continental Reinsurance. She is a champion for profit with purpose and a featured contributor to the forthcoming 2026 anthology titled Unshakable Leadership. Kindly join me with your claps to welcome Mrs. Adeolu Adewumi-Zer to this conversation. Welcome, Mrs. Adeolu Adewumi. It's a pleasure to have you here.
Thank you, Folashade. It's great to be here. Looking forward to the conversation.
It's a pleasure. Our second panelist is Mr. Sam Kuki Jr. He is the CEO of CG and QMS. He is a board director level professional with broad management and leadership experience gained through boards and governing bodies in a variety of corporate, professional, and other organizations. Mr. Kuki is a former independent non-executive director of Stanbic IBTC Bank, where he has chaired both the risk and audit committees. He now serves as an independent non-executive director and has successfully served in the role of chair of the Nominations and Remuneration Committee, as well as board chairman. He is an IFC certified board leadership and corporate governance trainer. We believe that Mr. Sam would also bring direct insight into how businesses are adjusting to investment risk decisions in the current economic environment. Kindly join me to warmly welcome Mr. Sam Kuki. Mr. Sam Kuki, it's a pleasure to have you here.
Pleasure to be here. Thank you. Thank you very much.
Thank you. So, once again, viewers, the theme for today is economic outlook, macroeconomic trends, governance, structural reforms, and growth perspective. So I would like to begin with a scene-setting question to Mr. Sam Kuki. What are some of the important macroeconomic trends that you think will shape Nigeria's outlook in 2026? We've all heard what the keynote speaker had to say about where Nigeria is and what the expectations from Nigerians are and from business owners. How should boards and business leaders interpret these trends beyond the headlines stated? Thank you.
Yeah, thanks very much. And I think Nii did a good job on expanding on these. I think the big question for directors and for boards is, what does this actually mean for us? There's a lot of information, and in a sense, there's potentially information overload. So the risk for us sitting in the room is that we get summaries, short or long, and a point of view, and then we quickly go over that and go into the Nigerian situation, which we get a quick summary of, and then we go on to what I'll call business as usual. The risk there is that we then lose the opportunity to understand how those dynamics actually impact our business. So I think one of the first things that directors need to do is to try and filter what this information overload and have ways to establish with management what's important to us. What does this mean for our business, for the sectors in which we play, for the ways in which we will act with that information? I think that's the sort of first thing that we need to do as boards. And when we've done that, I think we then have to be thinking in terms of how will we use our governance framework to prepare for that. I think one of the big things that comes out of what Nii said is, if it's going to be uncertain, and the questions also showed about the known unknowns and so on, then preparation is key. And I think perhaps the key for directors and boards now is that preparation will make their governance success permanent. It's not just about receiving information, it's about processing that information in a way that allows us to take advantage of the opportunities and also be mindful of the change in the risk environment. So risk governance is going to become very important. I think that's there. And I think the last thing I'll point out is that boards will need to be proactive. That means working with management and risk managers in a proactive way. We can be presented with, okay, so given this international thing and the national thing, we think we'll go this way. I think directors need to be asking a bit more about what the scenario options are and to be following that road a bit more, just to assure themselves that they've understood what the options are and how they can use that to lead and direct the company. So I'll stop there.
Thank you. So what I hear you say is that boards need to move away from data overload, to do a kind of data cleansing and analytics to bring out what is critical and important to driving their businesses and their organizations, leveraging on proper corporate governance and being proactive to ensure that they're able to mitigate risk or avoid it as much as they can. Thank you very much. Mrs. Adeolu, leveraging on what Mr. Kuki has said, what structural changes, as the structural changes are unfolding in the Nigerian economy, what opportunities do you see for startups and SMEs to thrive? And what governance frameworks will help them to seize these opportunities effectively? Thank you.
Thanks for the question, and thanks, Sam, for already giving me the great basis to stand upon. So I think what we need to remember is that the scenario that Mr. Nii has painted is not all doom and gloom. In fact, there is a lot of cause for optimism. I tend to be a cautious optimist anyway, but what I see is that last year, and even more so this year, that there are signs that Nigeria is back on the right path, that despite all the complexity and one can say chaos going on in the world, that we've found a path forward. And of course, there's always things that are happening that we need to be flexible about. So I would say that there are two opportunities that we can take as SMEs, and I say we because I consider Zer Consultant Africa to be in the same boat as our clients and our audience today, and that's one of the benefits of actually being down on the ground in the economic realities, because you're facing them yourself. So the advice that we give, and I think Sam would say the same, is actually couched in the reality that we ourselves are facing. And so the first is to really see governance as currency. And the reason I say that is, trust is becoming more and more important. Trust was always important for relationships, but in the world of AI, in the world of a low trust, in markets that are traditionally perceived as being less trustworthy, companies that are able to to demonstrate and to prove how trustworthy and by that how transparent their operations are will actually show a clear advantage. And any advantage that we can get as companies fighting out there in the big bad world, I think is something that founders and CEOs really need to pay attention to. So using governance, seeing governance less as this compliance bad wolf that we just need to get through a checklist, but actually taking advantage of it and leveraging it as really your trust currency. And then the second thing, and I believe that Mr. Nee had mentioned it as sort of as an aside as he was going through his slides, is the diaspora. So the African diaspora, by many counts, is the third largest population in the world. And by diaspora, we're not talking about just Africans on the continent, but we're not talking about let's say first generation Africans who have left the continent, but going beyond that. So the full Black African diaspora, 350 million is the last count that I heard. And so what are we doing to tap into that diaspora, particularly as events become a bit messier in the West? I've seen and I've experienced that many of my friends and former classmates, etc., who are still in the US or in the UK, etc., are really pivoting back and having looking again at their home countries to see how can we get back, because actually this grass is not so green as it's becoming brown actually. So let's go back home. If we have to face difficulties, at least let's do it with people who look like us. So that's what I would say. So two, using governance as trust currency and tapping into that diaspora who is showing even more interest in what's going on back home.
Thank you so much. Very interesting conversation on trust as a currency, and employing government and boards to build capacity in enshrining trust in their businesses, so that they can leverage on that to have people buy in to what they do, and also government understanding that where they build trust, the people are able to see that government is working and that things are actually functioning, and it would help a lot of people that are looking at coming back home to invest or to settle, to see that yes, they can come back, and that the environment and the economy will be welcoming, and the policies also will support them investing in Nigeria. Mr. Cookie, with the reforms, the policy reforms happening currently, one that comes to fore for me is the tax reform, because I'm a tax administrator. So looking at the policy reforms and the fiscal adjustments that are unfolding in 2026 as we have it now, what governance trends do you see emerging that boards must prioritize to maintain resilience and compliance? Looking at government regulations, looking at the fact that those regulations would define and determine how far some boards and corporate organization goes this year. What are your thoughts on that, please? Thank you.
Yes, thank you. I think that the key thing is that boards need to strengthen the mechanisms that they have for evaluating these developments. The first thing I think would be to strengthen the scope of the committees and the assignment of things to committees, because that's where the engine room where these things will get done. In being proactive and trying to keep up, it's important that there's sufficient focus at board level. And I think that the committees offer the best opportunity. In some cases, they may have to strengthen the existing committees. They may actually have to assign a specific scope of additional responsibility to existing committees. But I think that's something we expect to see as a board response. I think the board itself also needs to identify the dependencies. These things tend not to operate As Nii said, you have a growth rate average 4.5. You have some countries will do 6, some people will do less than 3. So even for a company, the impact on their business is unlikely to be uniform. So the board needs to be able to segment and understand its revenue lines and how it's performing. And so it has to be able to extract that information and work with that information with management. I think that will be a crucial element that boards can add to do what they're doing. I think that the study of the tax law and its implications is crucial, which means that they probably have to have a documented new tax policy. Again, so it's not just discussion and we think and we don't, but that there should be a study about what does that mean to us, and what does that mean to us in the various segments, and for some of us in the different markets in which we operate. So it's important for the board to be expecting that kind of information to come out from management with guidance as well. It will also impact the supply chain. For many companies, the impact may not be on them directly, but may impact the companies that are their key partners, key suppliers, or operate in other markets. So there may be conflicts of laws or interest or whatever arising from the downstream and other partnerships that they have in people and operations. So I think the board needs to be keeping that in view. And lastly, I think the boards will need to strengthen their awareness and monitoring of both their customers and their competitors. Nii spoke of collaboration and so on, and I think Adeolu mentioned it as well. If there's no looking at what the other side is doing and what the other participants in that sector and in that space are doing, we can find ourselves taking isolated actions. In some cases, it may make sense because we've seen things through our methodology that others haven't seen. But it can lead to isolation and some judgment problems. So I think boards will need to be sure of how they're extracting this information and putting it into policy, and then also monitoring that the changes in the environment, remember we've agreed that it's going to be a variable, vulnerable, whatever environment. Taking decisions initially will need also to be measured to see whether the information that we started with that guided the decision is still relevant or valid. So I think, again, boards need to be expecting that level of interaction with the management.
Thank you very much, Mr. Sam. Yes, very, very fundamental. Looking at what has gotten organizations this far and seeing whether it still meets with current day reality in line with the policy reforms and the fiscal adjustments as government has rolled out. Looking entirely at the framework of such organizations and seeing what needs to be recalibrated, what needs to be changed or restructured, and measuring those mechanisms and also communicating it effectively and ensuring that everything is done in a timely manner to be able to meet those reforms and regulations so that you don't fall out of time and you're able to continue business as at when due. Thank you so much. Mrs. Adeolu. So, business owners, navigating 2026 for business owners. What do you think are the 3 most important operational adjustments that they should make to remain both competitive and to sustain their businesses this year? Because a lot of business owners will be impacted by a lot of the policy reforms and the fiscal adjustments that government has rolled out and has started January 1st, 2026. Thank you. Your thoughts, please.
Thank you for that. And I'm one of those business owners who are being impacted, and impact, positive, negative. I'll leave it at a neutral impacted. So I would say that, a conversation today is not complete unless we mention AI. It's in focus for us as Zer this year. We have 3 focus areas, and one of them is becoming AI first. And having to decide for us what that means. It can't be a copy paste. So everyone's looking at AI in different ways, and each company has to decide how best you can use technology, because it's not about AI, it's about using technology to become more efficient and become more competitive. So I would say that's the first. And I think the government and different organizations are really putting a lot of effort into making sure that Nigeria is able to be part of this wave and that we're not left behind. The second, and sort of related with my point there, is this whole Nigeria first, although I like to be very careful about, because I do believe that we are Africans first and Nigeria second. And we've seen countries that have taken this first mentality and the dangerous road that they've gone down. But the best part of saying that your country is first is that you're doing what you can to bring benefit to your people and to the mass population. So it's not about just the elite or the political class, but really how do we as Nigerians, how do we move forward, and how do we really unlock the shared value? And that's a concept that we drive very much, not just within Nigeria, but across Africa, that whole shared value concept, meaning that business is business, and business will drive the economy, and the role of business is to increase profit, but that profit has to be with purpose. So are we generating profit in the right way? Are we bringing the communities that we're working within alongside with us? And so supporting that Nigeria first narrative. And then the third that I would say is we have to look at our talent. So talent has always been a topic. In the 25 years I've been working, every year there's a discussion around talent. This year won't be any different. So it doesn't mean that we don't continue that focus. So as people are being able to work more remotely, remote working is really becoming the norm. What are we doing to build the cultures that will support a new generation of remote workers, even as the current generations are also having to shift mindsets, etc. So in the end, we want to leverage best practices around the world, but really bring it into our African context. So when we look at AI, it's not about copy pasting what's being done in the West. It's really finding our solutions as Nigerians, as our own individual companies, prioritizing the impact that we can make within Nigeria around the shared value concept. And then really, it all starts with people. So how do we build the cultures? How do we build the talent? Starting at the university, starting at the primary school levels, so that we are building for the future. And that's what we're trying to do. Thank you.
Thank you so much. Curating our solutions to meet our peculiar challenges and not just doing copy and paste. I like that so much. I like that so much. Being creative and ensuring that what we are bringing to bear is what would actually help us navigate our own conversations and our own problems. And bringing AI into that. Still with you, Mrs. Adeolu. You spoke about technology, businesses moving away from brick and mortar, and having like a borderless kind of business that transcends into the diaspora. So where people are able to do business across the globe. So how do you think at the nano small level, how do you think we can go about this, ensuring that technology comes to bear and is available for those line of people? Just as an addendum to what you're saying. Thank you.
Yeah, so what we've seen is that technology has actually enabled countries like ours, this part of the world, to actually leapfrog a number of the maybe more established markets. And we have the ability and we have the potential to use AI in the same way and use technology in the same way in today's world. Small teams can actually punch above their weight because they're using things like AI agents, they're using AI tools, they're automating their processes so that rather than having 10 people manually doing one thing, doing the same thing, they can have one AI supported person who's doing the same. So you no longer have to build or try to build these massive teams to be able to grow from being a nano business to a micro business to a small to medium and one day be a global multinational. I've read articles where people sincerely believe that a one-person business theoretically in a time nearby will be able to drive $1 billion in revenue. So why can't we do the same? We can start today.
Thank you so much. Thank you. So Mr. Stam, what do you think are the most critical governance risks that boards should anticipate this year at the macroeconomic level, and how can they proactively address them before they impact performance? Thank you.
Yes, I think the volatility is the first. We've mentioned that, we've spoken about that a bit. I think just these center on strategy and risk. These are first cousins, strategy and risk. And I think that this insecurity is actually a strategic risk more than it is an operational risk. We just tend to think in terms of whether you can supply your goods here and there and so on. But I think it's very central to your ability to continue and sustain your business in this market. So I think it needs to be promoted to the strategic risk level and needs to be looked at in that way. Nii mentioned Greek, where, for instance, if someone plants, he won't go back there. So it's going to impact a lot of things beyond operations. So I think that perspective is one of the things. I think we have to recognize that we have an impoverished population. The numbers show us that the spending power of the population is seriously depleted. And I think that's going to have an impact on not just the products we produce, but on how we distribute them, how we present them. We can already see it happening in the market, fast-moving consumer goods, that sort of thing, where the packaging is changing so that people can buy smaller quantities, so that they can. We have to recognize that the market, the customers, are effectively impoverished, and we're dealing with a largely poor 200 and something million people, not a rich set of people. And I think that puts pressure on us as directors and as boards to be innovative. I think the way out of it is to think it through and innovate. And Adeolu, thanks for mentioning AI. It's an effective tool for innovation. But we can't do what we've been doing with the same packaging and all the rest of it and expect that the population will afford it. It won't. And it can lead to other things. So we have to now start to address innovatively how we bring the goods to the market, how the customers can access it, and how we can use that to grow strategically our business. So I'm expecting activity in those areas in the boardroom.
Thank you. So that is looking at the global value chain from and production. Local. Sorry?
And local. And yes. Local as well. Yeah.
Yes, the global value chain, even within Nigeria, from production to the market, transportation, security, creating products that are fit for purpose. Looking at it that, okay, now with the poverty rates on the increase and all that, you create products that can easily sell, and not for the high end alone, but looking at those that are at the base of the pyramid and what can easily move in the market. Thank you so much. Thank you so much. Mrs. Adewumi.
If I could add to that.
Yes, please.
If I could add to that. Because I really like that. And thank you, Sam, for bringing that up. I just want to make sure that that's clear for the audience that it's not just manufactured products like, hard goods that we're talking about. Also services. We have to think about how we repackage our services so that companies, because we're usually business B2B, right? So businesses who are facing the same economic strong winds that we are still able to access those services, but perhaps in a different way, so that it's more affordable, that it's more accessible, that we can still continue to support our clients and to help them build their businesses, but in a way that they can manage within their current budgets. Just wanted to add that point.
Thank you so much. And then I think I should add communication, communicating it in a language and in a manner that they understand, because Mr. Sam earlier on also spoke about, I think it was Mr. Sam or you, spoke about communication. So communicating the products, marketing it in a way that it would meet the need of the people and they'll be able to understand it and buy into it, whether service or product. Thank you so much. So back to you, Mrs. Adewumi. With your wealth of experience in scaling businesses and driving transformation, what do you think are the key strategic challenges that founders should expect? Because we've been speaking to business owners, but there'll be people that are just setting out on the journey. What are the key strategic challenges that you think they should expect due to the shifting macroeconomic conditions in Nigeria? And how best do you think, from your experience, that they should prepare for same? Thank you.
Yeah, it's a good one. Thank you for that question. So I would again split it into two. So going back to my very first point where we say that we're at a place where we can be cautiously optimistic. I used the term Afro-optimistic about our current future and what we can build in the short term. But there's lots of distractions, right? So we're every day, if you're consuming social media or any kind of news, however you get your news, there are so many things that want to bring us down. And so I would say that as business owners, particularly new business owners, singular focus has to be the name of the game, so that you know where you're headed, you have a clear vision in mind, and you don't allow yourselves, and we don't allow ourselves, whether it's an election year, whether it's talks about invading lands that don't belong to us, whatever it is that's going on in the world, that we know where we're headed and that we stay on that path. Yet to also have, as Mr. Sam mentioned, I call it a plan B. So to be flexible about how you get there, so that you're prepared when things, because it's not if, when things don't go exactly as we had envisioned, yet we still will find a path to get to that spot. So twofold, have that focus, that one thing in mind, but then also have your plan B when things don't go the way that we had expected. That would be my advice, twofold advice to particularly new business owners.
Thank you so much. So, Mr. Sam, that is your turf, that's your area of specialization, risk management and project management. So, leveraging on what Mrs. Adewumi has said, and introducing that topic on risk in an environment of on economic uncertainty, what governance structures or processes are most, or do you think are most effective in strengthening risk oversight and strategic decision-making at the board level?
Yeah, thank you. Well, I like to simplify risk. We tend to run away from risk because there can be a lot of complexity in the way that you generate your risk answers. But risk is basically scanning and planning. And the approach of the board is to scan and plan and also determine, get assurance that the execs are scanning and planning with them. So the approach would be, given the diversity of things, what in our methodology gives us the information we need to act on an informed basis. So I mentioned earlier the power of committees, and I think, again, that's where the action is centered. So are we obtaining the level of information that we need? And again, it's not good enough to just say, yeah, we think there's going to be volatility, therefore. Again, I think boards need to just ask a few more. Okay, so yes, we hear you. Are those assumptions correct? How do we validate them? What other options are there? So that you can look at the scenarios together. And I think between the committees, especially risk committee, bringing material to the board, that exercise should have taken place so that the rest of the board is acting on a properly informed basis. Otherwise, we tend to get generalized statements, and everybody wants to read quickly and pass and go on to the next item. We have to finish this meeting quickly. But if you scan without noticing, then you are likely to skid. If you just take the analogy, there are potholes, there are curbs, there are children crossing. So again, there's a lot of noise on the roadway. And what you're trying to do is to maintain your focus on what matters. So an argument on the right-hand side or left-hand side may not be important to us as long as it doesn't enter the path we're taking. So again, boards need to have ways of finding and measuring what's important to us, and then what will it do to us in the different segments in which we operate. So when they take a decision, they can then hold it and hold it with conviction and not be second guessing themselves every quarter when they have another report. Because that sort of indecision means that you don't actually get the result that you need. If it's considered properly beforehand and you've decided it and you go with it, it should work. And I think so for the board, it's how have we set ourselves up to make sure this is happening and that we're not distracted by other board dynamics, individual interests in one segment or another, looking at perhaps changes in the business plan. A lot of responses now that companies are making to this environment may involve gradual, subtle changes in the way that they structured their business. And you can actually slide into a new business plan without realizing. So you're then operating in an environment led by adjustments to these things, but with a business plan that's not appropriate. So we have to be thinking in those terms at board level to be sure that if we're taking those conscious decisions, and then that we're being faithful to executing them, and that we have the infrastructure, the board infrastructure and information flows that will help us do that. I hope that helps.
Yeah, thank you so much. Being intentional as a board to actually do the fine combing, to look at things, knowing that change is a constant and that the world is continuously evolving, and being able to take those hard truths and hard decisions to be able to move the board and the organization to the next level. Thank you so much, Mr. Sam. My final question to you, Mrs. Adewumi, today is that as we prepare for the economic dynamics of 2026, what governance principles, okay, I think about this. Okay, what governance principles should founders adopt early to enhance organizational resilience and performance? Have I asked this question? No.
I can shift it a bit.
Yes, please. Yes, please.
Yeah.
Yes, please.
So that is not focused just on governance principles, but principles in general.
Yes, look at it from the perspective of organizational resilience and performance for founders, what they can adopt to ensure that those are enhanced. Thank you.
Yeah, thank you for that final question. So I'm big on legacy. And the reason I say this, so when people ask me why did I come back to Africa, why did I come back to Nigeria, I tell them that very clearly, it's my children. So I'm here to build a new Africa so that my children, not myself, my children can grow up as proud global Africans. And so what does that mean? What must we do? What must I do to make that happen? Right. And so the first is that, and where I focus as a business consultant, strategy consultant, is to build businesses out of Africa that can compete on the same stage against their counterparts in Asia, in the Americas, in Europe. And the first, and there are three things that we have to do as smaller businesses to get there. And the first is that we're trying to build institutions, right? So we're talking about legacy. So the structures or lack of structures and processes that you have in place at the beginning when this business is centered just around you as a founder-led business, founder-focused, is not the same business and processes that you can have in place if you're trying to build an institution. So how do you decouple the founder yourself from the business so that you can leave that business as a legacy and that business will live long beyond you? That's the first. And part of that is what Sam was saying or alluding to, is having a proper board in place, right? So that leadership is not just through you. There's oversight. So the CEO is the boss, but there's a boss above the boss, right? And that's the board. So as smaller companies, perhaps a full-scale board is not the best thing to start with. There's advisory boards. Don't even have to title them officially advisory boards, but that you have a circle of folks who you use as your sounding board and to provide you an external perspective that maybe your own team doesn't feel comfortable to provide. So sort of that harsh feedback. And then the third is your team, right? So if you have processes in place, you decouple the decision-making from yourself, you have oversight from external, then how are you leveraging your team to lead alongside with you so that if you would step down, when you would step down at some point, because that has to happen if you're trying to build an institution and leave a legacy, that team and your successor can continue that business well beyond our lifespan. So those are the three, three operational, I forgot what we call them, operational challenges that I would say, or operational areas that new businesses I would want us to focus on in 26. So decoupling a business from us, putting the proper processes in place to do that, bringing in some form of oversight, whether we're not ready to go to a board of directors, that is an advisory board, informal or formal, and then upskilling our team to really take over the leadership of the business so that we are able to step back at the right time.
Thank you so much. So across all the questions, your conversation, I've had some resounding decimals on technology. I've had a lot, you've said a lot about Proudly Africa, building capacity, showing Africa to the world, creating conversations and solutions that are bespoke to the challenges that we face. Building something to last and that outlives the builder or the founder. Leveraging on objective evaluation, professional oversight, objective criticism, either in-house or outsourcing that. Continuous upskilling and upscaling. Thank you so much. Thank you so much for letting us glean from your wealth of experience. Mr. Sam, my final question to you today. With your wealth of experience in chairing audits and risk committees, what practical steps do you want to leave with our listeners and our viewers today, especially for directors? What practical steps do you think directors of companies can take that would enhance transparency and stakeholder trust amidst growing economic volatility? And maybe I should do a step back. Beyond directors, governments, organizations, what are the practical steps that you think that they can take to enhance transparency within the organization or government, and also for people to be able to build capacity in trust? Because at the beginning of this conversation, we discussed trust as the currency if I recall what Mrs. Adeolu said. So can you please shed light on that amidst this growing economic volatility? Thank you. Those will be my final questions to you. Thank you.
Yeah, I just endorsing what Madam Adeolu said. Trust is crucial. One of the biggest problems that founders have is separating themselves from the entity that they founded, which is their baby, and the identity that they've grown over a period, however long or short, becomes part of them. And they find it difficult to then trust the system, whether it's a board or another body or government advisory or so on, to deliver what they have delivered successfully over the years. So I think the first thing that directors need to do is to trust the system. And especially founders need to trust the system. If you do what you're meant to do, what governance has been designed to do, then the organization will do what it's meant to achieve. And they need to be assured of that step. It's a very difficult step, and I think it's one of the biggest things that founder owners have to overcome. But once the board is in place, the board becomes the mind and soul of the organization. And if it's set up properly, you should be able to change the team members and still achieve results with that team. So the next thing is that you then have to be building the right team. And we have to strengthen the way that what we expect of boards. A lot of directors are conflicted because they represent one interest or another or whatever. But the allegiance of a director, when we are appointed, our allegiance becomes an allegiance to the company. And what governance expects from us is to act first in the fully informed basis, we've talked about that, and then act in the best interests of the company. Now, that will often put us at variance with some interests on the board. So you have a dozen people and one player expects that you should pass the ball to me all the time. That sort of dynamic doesn't make for team play. So I think the board members need to understand that together they achieve what is set up. And they have to trust the system. They have to trust their committees. They have to trust their execs, so that whatever comes through the filter is actually genuine information for them to act in the best interest of the company. So I think we have to build that in boards. There are hurdles to pass over, and those are sort of personality hurdles, shareholder hurdles, all those things. They impact the actions that directors are taking. Again, directors need to filter what's important and understand which is noise and which is important. And that needs independent mindedness. So you don't have to be an independent director to be independent minded, but you do need to have the courage to speak up and at the very least provoke a conversation. If you provoke a conversation, the conversation takes its own life. But if you say nothing, then I think as a director, you're not showing the courage that's needed in that position. So these are some of the things in the dynamics that I think we can encourage directors to do differently.
And sorry to interject, Mr. Sam. I think in wrapping up, can you just give us your final thoughts along with your answering this question? Your final thoughts also alongside the question. Thank you.
Yeah. Trust the system. Set up the instruments, put the right people in place, expand or shrink or change the team players that you need to get the outcomes that you need to get.
Thank you so much. Thank you so much, Mr. Sam. Trust the system, create structures. A business is just as good as the plan and the structure and the team that would make it happen. So be intentional about building your team, not only about creating or having an idea or a plan. Mrs. Adeolu, please, would love to have your final thoughts on the conversation today. What are your final thoughts, please? Thank you.
Yeah, so I would go back to what I said about being an Afro-optimist. Very optimistic, cautiously optimistic about the future of our nation. Yes, there are complexities, everything won't be hunky-dory, but to remember as founders that we need to build even within the storm and not build small bungalows, but build skyscrapers. We're the largest market in Africa. And so if Nigeria doesn't succeed, Africa doesn't succeed. And so that's what I leave for all of us, is that we want to build a legacy as Nigerians so that we're building a legacy as well as Africans.
Thank you so much. So at this juncture, we are going to open up for questions. You've had all that has been said with respect to this conversation. Mr. Sam has said so much. Mrs. Adeolu Adewumi-Zer has also spoken. Please would like to open up the chat room for questions. You have questions for our very erudite and experienced panel of speakers. Thank you. Any questions? Any questions from our listeners?
I think we have one on the chat box. I don't know if I can just take that.
Yes, please.
Okay. As we experience major financial recapitalization in our financial sectors, what is the implication for this? What are the possible relief to employees? As we know, some firms, sorry, I just need to know what this is. As we know, some firms will go down with the recapitalization. What is the fate of the investors? Thank you. Should I take it again? As we experience major financial recapitalization in our financial sectors, what is the implications for this? What are possible reliefs to employee? As we know, some firms will go down with the recapitalization. What is the fate of the investors? So we have a lot of what if.
Okay, so I think that falls rightly on the table of Mr. Sam, the risk expert, that looking at the implications of recapitalization, what do you think are the possible implications? And how do you think this would impact employees as well as the investors in the business? Thank you.
Yeah, well, once again, I just remind us that risk, when we say risk, we always think of crashing a car. But we all went through COVID, which was a major risk. And as mentioned before, the platform we're on accelerated and left everyone behind because they were prepared when COVID hit. I think that the opportunity of recapitalization, if we look at why it's taking place, is that we need to have domestic capacity for larger ticket transactions. We're trying to create an environment in which we can participate in those larger projects and so on. So the capitalization is important for that sort of large ticket operation. From a risk point of view, will everybody make the threshold? Possibly yes, possibly no. The answers will lie with the decisions that the board is taking. Some of them, the investors may decide to join or sell or do or some other way keep their interests going. We've seen this happen before. Some have merged, some have been taken over, bought over, and so on. So it's actually part of the normal life in a financial system. Even if it was not driven by a regulatory requirement, firms get eaten up anyway by other firms who see the opportunity in their revenue lines and their markets. So it's not just about, oh dear, the regulation is going to put us in trouble. If you were vulnerable, you needed to understand that in the first place because your capital may have been inadequate. That's why you're studying capital adequacy as a board. If you have a niche market in which you can change to and so on, fine. If you don't, then again, the board has to look at what its options are. So the answer, yes, it is possible that even where a bank does meet its new capital requirements, it may change the way it operates and the way it does things, and you may or may not take on or lose some people. That happens. So I would disconnect it strictly from, oh dear, this regulation is going to cause trouble, to we are operating in a market which is consolidating for to take advantage of the opportunities that exist. Again, back to Adeolu, yes, we're a market, but we're also a potential provider to a much wider market in Africa. So even if you're shrinking here or not able here, there are still opportunities which this recapitalization will give us. And I'd just like people to think in the wider context of what the opportunities are and how to get the best out of them.
Thank you. Thank you, sir. So I think this next one from Olufemi Ogujobi is a bit of a comment and also leaning into what your thoughts are. That yes, excellent session. In view of the economic state of most African countries, an African first strategy might not augur well for us as we are not competitive. What is our advice for Nigeria in terms of engagement with US and other G7 countries? So I think I'll throw this open, but let the questions or the answers be very brief, because I think it's just a comment and just asking for your perspective or view. Thank you.
Adeolu, are you going first?
I'm happy to start since you were put on the hot seat for the other one. So I'll have to politely disagree with this comment. So in terms of what does it mean when we say we're not competitive? I think we've seen enough proof of how Africa is actually supports and is the reason that many of the Western economies were able to survive and thrive up to this time. So it's about time for us to take an Africa first approach and leverage those resources that we've been so freely given to the rest of the world for ourselves, so that we can also move forward. And remember this as we engage with the West, as we engage with the US and other G7 countries, that we engage with them with our heads raised high.
Thank you so much. Okay, yeah. I think, okay, Mr. Sam.
Yeah, no, I agree with her. I think that the initial assumption that we're not competitive as a global statement is not fair on Nigeria. I think if you've looked at what happens, if you go to the airport and see what's moving out of here, from rubber slippers to whatever, we need to be looking at the opportunities in the markets and positioning ourselves properly. We still have a larger installed capacity for many things than some of our neighbors and others. We still have a lot of agricultural opportunities. There are a lot of things that are opportunities. So we shouldn't stop ourselves and leave the doors open. I think we need to think carefully as companies what those opportunities are, dimension them, and go in with knowledge, because Africa is available. And if we don't take it, everybody else will take it and we'll sit here scratching.
Thank you so much. So viewers, as we bring this discussion to a close, I want to appreciate our very esteemed and erudite speakers, Mr. Sam Cookie, Mrs. Adeolu Adewumi-Zer, for very insightful views. And you can see from the fact that they left no open ends and there are limited questions asked, because they've been able to cover all the pieces. So on behalf of the Society for Corporate Governance Nigeria, I want to appreciate you. I want to thank you for your time. Viewers, I want to thank you for your time. And I think as take home, I think first is that they've been able to address macroeconomic trends. Looking at clear agreements that Nigerian households and firms are adjusting defensively before they adjust expansively, and that behavior is being shaped as much by uncertainty and credibility as by policy measures as we have it. And secondly, on governance, today's discussion reinforces critical realities. Economic outcomes are increasingly determined by institutional effectiveness, that the gap between policy designs and policy delivery remains one of the most binding constraints for growth. Thirdly, on structural reforms and growth prospects, we've had a sober but constructive assessment from our panelists that potential for growth exists, but that it would only materialize where reforms are prioritized, sequenced, and shielded from reversals, and that growth over the next years in companies, on boards, and organizations will depend less on ambition. You've heard Mr. Sam say that, and also Mrs. Adeolu, and more on disciplined implementation by boards, corporate organizations, and even governments, particularly where government policies, as relates to government policy, and Mr. Yusuf also spoke about that, energy, fiscal management, productivity, and the investment climate, especially in Nigeria, building capacity in that. I would say that one of the most important unresolved tensions that emerged is this: how quickly can Nigeria translate reform momentum into tangible choices, tangible micro-level outcomes that would restore confidence for businesses, investors, and citizens alike? So for those of us in the room today, board members, executives, and policymakers, we thank you for your time. We are hoping that these conversations would help shape capital allocation, employment decisions, and social contracts as you go into 2026, making decisions that will build capacity in your organizations. On this note, I would like to thank our panelists once again for their honesty and depth, and our audience for their engagement. Thank you very much. My name remains Folashade Koka. On behalf of the Society for Corporate Governance, I want to thank you for your time. Thank you very much.
Thank you very much.
Thank you very much. Thank you. Thank you very much, Dr.
Thank you very much.
Thank you so much. I would like to call on President, Mr. M.K. Ahmad. We need to recognize the board chairman of the Society for Corporate Governance, as well as the president of the society. I would like to call on him.
Hello. Absolutely. Hello, can you hear me?
Yes.
Hello.
Yes, sir, we can.
Okay, fine. Thank you. I thought I was off. Good morning and good afternoon. This is supposed to be a breakfast meeting, and we're almost at the lunchtime. Apologies, but I believe it was worth it. Appreciation to Nii, Sam, very well-known face, Adeola, and as well as our able rapporteur, Dr. Folashade, who I believe very soon you'll be seeing her faces in terms of the new tax law. But I believe, given how friendly she is, you should be rest assured that you'll get things sorted out as soon as possible. In addition to those appreciation, I believe our society will send letters or notes to that. Appreciation also to about 186 participants today for their comments, basically. And appreciation to Rabi, a council member who created time to be here. I do not intend to go through what had been summarized, particularly by Dr. Folashade and Chioma, but just to indicate that this is a forum that has provided opportunities for us to tap from the huge potential experience, resources, and knowledge of our panelists. This is something that you can't get overnight. I believe it has provided that opportunity. We've been told of uncertainty, volatility, as well as the new reforms that are taking place. But beyond that, for me, I believe this is a forum that ideally should have been maybe monthly. But of course, given our time given our opportunity, it's impossible for us to have that. But I hope and pray that as a society, we can provide that opportunity by various programs and events that during the year would be holding, and of course that would provide that opportunity. I also just want to reiterate that we've been told the role of corporate governance, and I think for me that is the lesson. And particularly our second segment of this session clearly identified the role of corporate governance. NI had also articulated those issues clearly, and I do not intend to go through each and every one of them. So to ensure that at least it remains a breakfast meeting, once again, distinguished colleagues, thank you very much for your time, and apologies for extending our time by just 5 minutes. I can see Dr. Tola smiling, but I believe this was a great job. Thank you and God bless. Thank you.
Thank you
Thank you
so
very
much.
much, sir.
Tola,
Thank you very much, sir. Go ahead.
Tola, please, over to you. Thank you so
All right.
much.
Thank you very much. Thank you very much, sir. And it was such a nice blessing to have you close that for us as well. Thank you very much to our panelists. Dr. Folashade Koka, you did an awesome job. And to our panelists also, Mr. Sam Cookie, we are so honored to have you with us all the time. Thank you for being with us, Mr. Adeolu-Adewumi-Zer. We always call on you and your answers. Thank you very much. We appreciate you as well. I would just like to thank everyone to say my thanks also, to thank our keynote speaker, if it's Mr. Ni Yusuf. We really do appreciate your time with us this morning. I would like to focus on the offerings of the society. At the Society for Corporate Governance, we remain committed to supporting boards and organizations through a range of offerings, which include board evaluation exercises, board enhancement programs, board governance advisory, corporate governance audits, board policy documents, development and review, corporate governance advocacy, and of course, board recruitment. We also, we have a couple of trainings open. Our next training for directors and board members also scheduled for the 26th of February 2026, titled Corporate Governance and Sustainable Business. We kindly enjoin our members, all the 186 participants on the call, to please enroll for this program as we continue for good cause in Nigeria. So our calendar training is already been made. We will continue to post on the platforms for us so that we can really look forward to participation. I've learned a lot from this session, which we have also. So we welcome everyone to please
Okay, thank you. I think I'll take it. I think her network has got the best of her, but message clearly conveyed. We have series of programs for 2026, and but just to say a very big thank you. This is 12:08, and we like at the society to keep the time. So on that note, I would like to say a very big thank you and bye-bye to everybody. See you on the next one. Thank you.
Thank you.
Thank you, everybody.
Thank you. Bye for